Hi everyone, today we are going to learn about promissory notes. A promissory note is nothing but a written promise. In this, one person agrees to pay another person a certain amount of money. The payment can be either on a fixed date or whenever the lender asks. It is a simple but important tool in finance and law. Let's first see the main people involved. There are two parties. The maker is the one who borrows money and promises to pay. The payee is the one who gives the money and expects to be repaid. Having these roles clearly mentioned makes the note trustworthy and legally safe. For a promissory note to be valid, it should have some key features. First, the promise to pay must be clear and unconditional. Second, the amount must be a fixed sum, clearly written. And third, it must mention a time of payment, either on a specific date or on demand. These things make the note strong and enforceable. Along with that, there are some formal rules. The note must be in writing, not just spoken. It should be signed by the maker, which shows the promise is real. It has to be delivered to the payee, and it should only talk about the money payment, nothing else. Following these steps makes it legally correct. Now, there are two types of promissory notes. A secured note is backed with some security or collateral, like property or assets. This makes it safer for the lender. An unsecured note has no security, so it is more risky, but often it comes with higher interest. Which type is used depends on trust and risk level. Apart from this, there is another instrument called a bill of exchange. It is a little different. While a promissory note is a promise to pay, a bill of exchange is an order to pay. It is signed by the drawer, and the drawee has to pay either immediately or at a fixed time. Bills of exchange are commonly used in international trade, especially for imports and exports. If we compare the parties, the difference is clear. In a promissory note, only two parties are there, the maker and the payee. But in a bill of exchange, there are three parties, the drawer, the drawee, and the payee. That's why bills of exchange are a bit more complex. There are also a few important differences. In a note, the maker directly promises to pay. In a bill, the drawer orders the drawee to pay. A note does not need acceptance, but a bill must be accepted by the drawee. In terms of responsibility, in a note the maker is always liable, but in a bill, the drawee becomes liable only after accepting it. Finally, let's look at real-life uses. Promissory notes are used in student loans, housing loans, personal borrowings, and between companies. Bills of exchange are used in international business, bank transactions, and large trade deals. In all cases, three things are very important: keep the terms clear, take legal advice if the agreement is big, and always maintain proper records. These practices protect both sides. So, in short, promissory notes and bills of exchange are simple but powerful tools. They help people and businesses lend and borrow money with safety, trust, and legal clarity.